including food and energy, also lower than expected. That's the lowest in about 4 years. And month-over-month CPI, we actually saw a slight decrease. But the Federal Reserve still seems nervous about Trump's tariffs. So Jeffrey Small, president of Arbor Financial, joins me now to break this all down and clarify it for you at home. So Jeff, let's start with some of the good news today. Why did inflation cool?
Well, I think inflation cooled primarily because energy prices have fallen. They were actually hitting $57 a barrel yesterday, and right now they're hovering around 60, so that kind of brought everything down. But, the psychology of the economy is changing, too, with all this tariff talk. But, tariffs eventually will impact inflation, Alicia.
Mm-hmm. How so?
Well, obviously that cost that they're going to pay to import goods is going to be passed down to the consumer. And the question is, how deep is that going to be? And, we hear prognosticators talking anywhere from 0.5% to as high as 1.5% added on top of the current inflationary rate, which would put us at a pretty big number. And so, the Trump administration, I think, is trying to offset that with their recent legislation and passing the tax bill that just came to the House, which expands massive energy production. And if energy can counter that, then maybe it'll be an offset. But tariffs will have some impact. But we won't see what tariffs are impacting inflation until we really start to see the June CPI. And then through the next couple of months to September, then we'll really be able to see what really happened with tariffs and the impact. Hopefully, most of them will be resolved by then.
So you're confident that the tariffs, the extra cost will be passed down to the consumer and just won't be eaten up before it gets to the consumer. And then you're also thinking that maybe the Trump administration will pass the tax cuts that he promised. That bill needs to get through Congress still, but that might offer some relief. Energy prices, gas prices are down as well. I think energy is down 20% since January 20th. So that might offset the higher prices consumers are paying or possibly may pay at the store soon?
Well, it'll definitely have an impact. If energy keeps falling, that's going to trickle through the economy the same way the tariffs do. But for now, even though President Trump suspended the majority of the tariffs, there is still a 10% tariff on all things imported, no matter what country it's from. And that's brand new in countries like Canada and Mexico. And so China's a different story. We have epic tariffs there. So that's definitely going to trickle through the economy, and it will be put on the backs of the consumer to a certain degree. How much of that trickles through, I don't think anybody really knows. Right. And so we're all kind of sitting here guessing, Alicia, on what the CPI is going to be like in June, July, August, or September. That's when we'll see the true impacts of the tariffs that are present-day tariffs on China and the rest of our trading partners.
Yeah, because we haven't really seen what the tariffs would actually look like until this month. But the mainstream legacy media, they've been really portraying tariffs like doomsday, arguably triggering that massive market sell-off we saw a couple days ago before stocks surged yesterday after that 90-day pause on tariffs. But then today stocks are down again. Now, the Treasury Secretary said that today, up 10, today down 5, up 10 yesterday. Not a bad ratio, not really unusual. What do you think, Jeff? What's going on? And how do you see this playing out?
Well, I think that ultimately we're going to see inflation not rise as quickly as everybody anticipates. I think the economy is slowing down pretty quickly. The Fed is going to keep rates higher for longer. And if the Fed had done their job originally, they wouldn't be asking President Trump to engineer the economy to reduce inflation and reduce interest rates. And so President Trump, fortunately, unlike most presidents, is working for Main Street as opposed to Wall Street and the globalist corporations that have been managing and exporting the industrialized base of our country for the last 50 years. And so it's about time somebody's gotten behind Main Street and is trying to do the right things as he tries to re-engineer this as the ultimate economic puppet master is what I would see. But clearly their policies are designed to improve the everyday income levels and cost of living levels for every average day Americans.
And so far, how do you think he's doing on that?
I think he's doing a great job. I mean, he suspended tariffs recently because we saw what was happening in the markets. The markets were getting roiled, and so were the international markets. And that's kind of a good thing. But now countries are coming to the table. So he's fired the warning shot, and he pulled back. And that's going to give us relief at the same time. It gives our trading partners relief. And hopefully we can create a free trading environment, which is what we need.
Yeah, that's
we really need a free trading environment with Europe, a free economic zone with Europe. And then the rest of the countries will come and follow through in Asia. China is probably never going to give up.
Yeah, I mean, it would be in their best interest to negotiate, but we'll see what happens. Are you concerned that Wall Street might enter bear market recession territory?
Well, I think we were just right there. The S&P had dropped to 19%, 1% below bear market territory. The Nasdaq was around 22%, so we were just right there. And now we're kind of ebbing and flowing until we see what happens with the markets. But I don't expect much market growth this year as we go through all of these processes. And the Trump administration finalizes the tax bill that just came through the House. We don't know a lot of the details yet, except that they want to increase the debt ceiling and reduce spending by $1.5 trillion. And if they reduce $1.5 trillion of spending, well, that's going to be 3 to 4% of gross domestic product. That's going to have to be made up by tax cuts and reinvestment in America. And that's common with the theme to rebuild Wall Street from everything that they're doing or puppeteering from an economic standpoint.
Okay, so do you think the market's huge historic rally yesterday was it? Like that's all we're going to see for the year?
No, I think we're going to have more volatility. I think the market will actually rally more as we get more trade deals on deck. The correction was a flash crash, very similar to the March of 2020 COVID correction, where we fell 36% in 3 weeks. We fell 20% in a month. It was a very quick drop. And when we have very quick drops, we have very quick recoveries. And so just a hint of good news on the suspension of tariffs, and boom, the market pops up 9-10% in one day, one of the greatest rallies in history. And so I expect that type of beta to continue in the markets. That's going to be news theme based. The market correction had nothing to do with an earnings picture. It had to do with anticipating what would happen to earnings and the fact that companies, when they begin to report at the end of April, probably aren't going to be wanting to even issue guidance under the guise of this type of tariff instability. So the one thing we've got to do is get these tariffs done so we can get our markets back on track for growth.
Yeah. Well, let's talk about Trump's budget agenda. You know, he calls it the big, beautiful bill, just got a massive win in the House, passing today. It includes $1.5 trillion in spending cuts, an extension of the Trump tax cuts. Now it's the Senate's turn, so we're going to still see what happens. Does this big, beautiful bill actually, what does it mean for the average taxpayer?
Well, I think what it means for the average taxpayer is the Trump tax cuts are here to stay. From 2017, when he lowered taxes for everybody, and everybody got a raise of $4,000 to $5,000 a year at that point. I think those cuts are here to stay at this time. They're not going anywhere. But as far as the minute details on family credits and increasing the standard deduction and what corporate rates and individual rates are ultimately going to be, those will come out in a few months. But for now, at least those Trump tax cuts are permanent.
Mm-hmm. Good. All right, Jeffrey Small, president of Arbor Financial. Appreciate your time today as always. Thank you.
Thank you, Alicia.